Hi everyone, I'm Russell Muldoon from Montgomery Investment Management and welcome to this week's video insight. Well, we have already started to see a trickle of reports in the form of quarterly cash flow statements being announced by companies to the Australian Stock Exchange. And in just a few short weeks, reporting season will kick into full gear, and this trickle will turn into a flood of information for you to digest. This is arguably one of the most important periods of the year in terms of information and data flow. It gives all of us a chance to review our current portfolio holdings to make sure that we are only holding those with the brightest prospects. And it also gives us the opportunity to identify new investment candidates that could add to our portfolio's returns over the coming financial periods. Now, having been through many reporting seasons in the past, we find that the only way to get through the thousands of companies that are about to report and be able to analyse the new information properly is like anything in life. We all need to be prepared and organised. So for today, I would like to briefly talk to you about a structure which may help you guide through the torrent and literally thousands of reports that you're about to be hit with. In terms of your current portfolio, a simple process that I've found, or we have found, that works and may help you stay on top of your current holdings and monitor the performance of the managers that are responsible for driving the performance and hence the returns of businesses you're invested in, is to get your hands on a few historical financial reports, say the last 3 years. Print off the chairman and managing director's reports, and once you've done this, put the oldest at the front and the newest at the back, just like a little book. Sit down, read them, focus what management said, what they are going to do, make notes, and most importantly, when they release their actual annual results this year, review them in context with actually what happened to what they said was going to happen. Although this is a very basic technique, you'll find that this simple approach really works. You can get a good feel for what the top brass is saying, and then if they actually deliver on what the outcomes that they propose were going to happen. If you come across a situation where you feel the business's prospects have deteriorated, or if goals year after year are not being met, then it might be time to move on. Obviously, you want to avoid those businesses with issues, and what we do is hunt solely for those we feel have bright prospects. There are many businesses out there growing at breakneck speeds despite the current economic environment and the doom and gloom being reported in the media, and it's these that you should focus your attention on. This is a very easy way to cut through a lot of the noise, so try it out over the next month. Okay, just as important as managing your current portfolio is having a structure in place to identify new opportunities. Again, a simple system might be useful here. In the past, we have found that JIC sector classifications are very helpful. Using these sectors, which are now up on the screen, allocate each business you're reviewing to one of these and give them a score. Don't be too concerned if you misallocated a company, just put a company in the category that feels best sums up the business. You can use any factor that you feel comfortable with to create a simple scoring system, but basically a 1 should only be given to those who report very strong reports and the brightest prospects, as you see it. 2 for those who almost make it, and 3 are the rest, which you can forget about. The trick is to boil down your universe is to boil down the entire ASX into the top 5 to 10% of performing businesses. From there, you can go and do further research to see if the company's current performance is likely to be enduring, and if so, does it warrant a place in your wealth creation journey. As you build up a number of businesses in each of these groups, it will quickly become clear which sectors are performing well and which ones are best to be avoided. Just look at the number of 1s or 2s you've allocated. Do you have enough exposure to these sectors, or are you overexposed to a sector in the doldrums? And there you have it, 2 very simple frameworks which should enable you to better digest a mountain of information that will soon be coming your way. Use them to review your current portfolio holdings and hopefully to identify new investment opportunities. Once you've whittled down a few thousand companies into a handful with only the brightest prospects, you may find some real gems along your journey. Well, that's all for me this week. Remember to check out our blog and our daily insights, and please continue to follow us on Facebook and Twitter. Have a great week and enjoy this early start to reporting season in 2013.